Welcome back, guys. So in the last video we talked about other indicators with emphasis on Fibonacci, which we use for to find out retracement or to measure retracement. And I love Fibonacci, but I love moving averages more. So we're going to talk about other indicators now, and then we're going to talk about how to enter a trade. That is the best time to enter a trade. The best time to enter a trade. Now let's take a look at starting with stochastics and then RSI. In fact, maybe I'll probably just bring in the two of them at once. So we're going to start with add indicator, and then we look for stochastic oscillator. Yes, stochastic oscillator, green and blue and red. That's fine. Just use the default. You don't have to stress yourself over that. So stochastic oscillator. Now, see. Now, one good thing about stochastic as well is it can help you to know a little bit of what Fibonacci does as well. It helps you to know when retracements or pullbacks have completed as well. Now, take a look at this. You see this guy here. There are three sections in this indicator that I want you to pay attention to. The first is the bottom part. In fact, let me edit this indicator a little so that we can get a better reading from it. Okay, I'm going to edit it a little. Let me go back and get to the indicator. Now we have I think we have two periods, two levels there, 50 and 80. 20 and 80. I'm going to add one more period. Okay, I'm going to add one more period, and this period I'm going to make it 50. That is the midline. I'm going to make it 50. All right, so let's get that. Are we sticking with this? Yeah, let's stick with this. Let's just change this color to something darker so we can see more clearly. Okay, so we're done with that and done. Now the lines are clearer now. So we have the 80 points. We have the overbought area, the oversold area, and the midpoint here. Those are the three lines that you see right there. Okay, the overbought. So those are the 3 points that you see there: the overbought, the oversold, and the midpoint here. Now, what that means is this: whatever price action is going on at this point, irrespective of you see what's going on here. At that point, you have a hit on 200 moving average. That is explosive. A hit on 200 moving average with a corresponding overbought tells you that there will be no much buying in the market anymore. Not many people are going into buy anymore. Too many buys have taken place. It's most likely that sales will start happening from then on. Now, this is a good point for a trader to start selling off those on that same currency pair. So what I will be looking at is, what I'll be looking out for is, let my price action hit this 200, and then let my stochastic be at the overbought area. So when my stochastic is at the overbought area and crossed over down as if it's going down, that tells me that there's going to be a pullback from now on. Now the same thing applies here. Do you see that every time price comes to where you have the overbought or oversold area, there's a pullback from that point or a retracement from that point? If it doesn't quite get into this box here, the retracement will not be good move. You can see that. So every time it gets into this box, you see there's some good move in the opposite direction. And every time it gets into this box at the top, you see some good move on the way down as well. So when this happened, it went as far as this. When this happened, it went as far as this. When this happened, when this happened, these two here, it went as far as this point. Okay, so you see those good moves. But look at this. When this happened, it didn't really enter here. See how far it went. It didn't quite get to the 200. That is to tell you that it would not go too far up. And what happened? It really didn't get too far up. It started dangling from then on, and we call that a range. It started ranging from that point on. So this is the beauty of the stochastic. Now, RSI, that is relative strength, which is a short form for relative strength index, does about the same thing as well. So if I go to with indicators, I'm going to remove this one, get out, and then bring in okay. So now I'm going to bring in relative strength index. Is about the same thing. You click done. Do you see that? So it does almost the same thing as the stochastic does, except that the stochastic is a little bit more accurate. Let me see. So you can edit. So just to read up on relative strength index and stochastic, there's enough information in the PDF materials that I released to the class, which I'll be willing to release again if you need it again. So when you see price coming towards the 20 area or the oversold area, it means it's going to buy, which is what happened up here. And when you see price coming towards the overbought area, it means it's going to start falling, which is what happened up here as well. So you see it here, you see that the price starts falling from that point. You see the same thing here. You see those 3 peaks, it starts falling from that point as well. So this is what RSI and stochastic does. Now, one other indicator that gives me this same cool feeling is the Bill-Williams awesome oscillator. Let me bring that in. I'm going to remove this, sorry, delete this, and bring in that Williams awesome oscillator. I hope I can find it on, okay, awesome oscillator. I thought I was not going to find it on a mobile device. Okay, so awesome oscillator. Now you see this awesome oscillator shows you the volume that you have in the market, how much volume is there. You see, when the lines are long like you have in this place, it means that there are still a lot of volume in the market, which means it could still continue in that direction. And then when it changes, the green tells you that you're going to keep having sales, and the red tells you, the red tells you that price is coming down, and the green tells you price is going up. So when you have price switching from red to green, it means that there's a change in the mood of the market, and then it would continue to go up. Now, it is better to do buys when you have price, the greens, up above that midline. Okay, you don't do buys when price is, even though it is green but below that midline, then you shouldn't do buy there. You should be doing buy at the top. In fact, when you have bigger volumes at the base, it is not advisable to be buying. You should be looking for opportunities to sell. And what am I looking for? I'm looking for a place where you have red turning to green, green turning to red. When green turn to red like this and the volume start dropping, it means that price is going to keep going in the opposite direction, which is down. So I will be looking for opportunity to sell at this point, and then you look up and see what a moving average 200 sitting right there on top of price action. So once price bounce off that 200, it means it's losing steam. So I will just start selling from that point on. The same thing applies here, as you can see. You see it happen. The same thing applies here, as you can see here. You see it happen. So I will just keep selling. Right now, I am going to enter. I'm already in a sell in this currency pair in my own trading, in my live trading account. So you see activities like that. You look at this. Do you see that? Do you see this? You see what happened here? So volume changing from green to red and then crossed over to the bottom. So when it's at the bottom, I don't have fears. But the moment you see multiple green begin to show up, like I'm selling now, assuming I am selling from this point, assuming I have been selling from this point when price changed here, I've been selling from here and it's coming down. Note how I have 2 consecutive green immediately after a red. I would get out of the market here, telling me that there's going to be a change in the market trend. You see that? So that is how to use the indicator. Now, how do you take a trade with these indicators? How do you take a trade to get the best entry and the best exit? Now, you want to start your trade on a higher time frame, but you want to enter the trade on a lower time frame. What that means is you want to do your analysis on a higher time frame, and then you want to enter the trade on a lower time frame. There are different types of traders, which we're going to talk about in a bit, maybe in the next couple of classes. You have traders who stay in the market for long, and you have traders who stay in the market only for a short while. So there are traders who trade on the 1 hour time frame. All of these indicators that I have discussed in all of my trainings are relevant in whatever time frame you want to look at them. Whether you are looking at them at smaller time frame or bigger time frame, they still interpret the same thing for you. Okay, so I would be looking for opportunities to trade in the direction that the trend is going. Right now we have an uptrend, as you can see. Yellow, 14 moving average is already above the 800. 50 moving average has crossed over the 800. For 200 moving average is preparing to cross over. So what I'm looking for is just opportunities to buy. We are looking for buy signals now. So how do I trade this? Number one, I would be looking for, remember what I said, that moving average acts as magnet in the market. When moving average is going, price pulls away from moving average. But after a few pulls away, it pulls back to the moving average, and that is what happened here. You see how price was going up, moving average was going this way, and what happened next? Price came back to the moving average, and then it starts going away again, it starts pulling back to it, it goes away again, it starts pulling back to it, it goes away again. So you see price do that very often. Every time price goes away from the moving average, it pulls back to it. Okay, we call that a moving average retracement. It just retraces back to the moving average. If it breaks the 14 moving average, it will pull back to the 200, to the 50. If it breaks the 50 moving average, it will pull back to the 200. If it breaks the 200 moving average, it pulls back to the 800. And if it breaks the 800 moving average, then all the moving averages will turn around and start pulling back in the direction of the price then. Okay, so that is the beauty of using moving averages. So like I said, moving average is one of the biggest topics that you can have. And as you see here, how price pulled all the way to the moving average 800, but it did not break that. It broke every other one until that point. And you see that when it broke 200, what happened? 14 and 50 turned around and started coming down. But the moment it rejected off 800, they changed their mind as well. All of them went back to their original position and they maintained their position. So moving average serves as magnet. Now the bigger the period, the heavier or the stronger the moving average will be against price action. So any price action that is able to break 200 would have a hard time breaking 800, and if he successfully breaks 800, then we are looking for a complete change in direction, like what has just happened here. As you can see, he tried to break 800 the first time and failed, pulled back to 200 and rejected off 200. Now that is a strong indication that there is not enough people in the market to push this market up any further than this. And he pulled back to 800. He came back to 800 again and failed, but 14 moving average was already aligning with 800 as well, which is telling you that they are losing steam. The buyers are losing steam. That is, the bulls are getting weak, the bears are getting stronger. So price only pulled up. He couldn't get to 200 anymore. In fact, he couldn't even get to 50. He only pulled up a little to the 14 moving average and rejected off that. And the moment he did that, what happened? He fell through the 800 moving average directly. And when he fell through the 800 moving average, what happened? 14 moving average followed immediately and crossed over the 800 moving average. In the next couple of days, we are going to see the 50 moving average crossover as well, and then we are going to see the 200 moving average also cross over the 800 moving average. But before all that happens, we're going to have a pullback, a retracement to test this 800 moving average again. Anyway, I'm going ahead of myself a little, so I'm going to go back to where we were now. So that is that. So now you understand how this works, even on smaller time frames. So like I was saying, to take a trade on this now, what I would do is my usual trading time. That is the normal time frame that I work with, which is probably 1 hour. I trade more on 4 hours anyway. But let's assume that you trade in 1 hour because you are not a very patient trader. You want to make your money within the day and go home and sleep. Fine. So come to the 1 hour where you usually trade and see what price action is doing. What are the moving averages telling you? Right now, my moving averages are telling me I'm in an uptrend. Why? 14 crossed over 200. 50 cross over 200. 200 is preparing to go cross over 800. So what am I looking for? I'm looking for either price to reject off this 800 and start pulling back down, or to continue above 200 and above 800. And he did just that. He broke through 800 here, came back to test it here and failed, and now started moving up. So what am I looking for now? Two things. Number one, I am looking for my price to pull back to 14 moving average, which is what happened here. Okay, price pulls back to 14 moving average, I will do a buy. But before I do a buy, I will come back and look at my second level confirmation. You see what Awesome Oscillator did here? It changed from from red all the while to green at that same point when price pulled down to 14 moving average. That is telling you that there's going to be a strong momentum in the opposite direction now. So what do? I take a buy from that point. Let me put a line there so that you can get it better. Add a vertical line. I said this point. From this point. So if I was to increase the line, I wish I put the line above. Let me delete that line and put in a new one. So my vertical line said I wanted price to pull back to 14 moving average, and it did that here. So as you can see, it pulled back to 14 moving average, and then what happened? At this point here, you see the price action change from red to green on the Awesome Oscillator. That tells me that buying has started now. So I will start buying from this point forward. Okay, so I will take a trade here. I'll take a buy here, a small lot size. Okay, I'll take a small lot size, assuming I have a small account, and then I will trade it all the way up to this point. Let me get my marker. So I'll take a buy here and trade it up to this point. There's going to be a pullback. I will be watching this. Okay, I will watch for when this finishes and start a new one. If this volume keeps increasing and this price continues break and closes below 18, I will get out. That's a loss for that trade, but it didn't happen. Instead of that, it just came down, changed to green again and started going. So I would wait for a pullback, and the pullback occurred here. I will take another position from here on, and then I will keep trading this. All of these candles I will trade, all of these areas I will trade them, which means I will still be in the market all the way to this point. Do we understand that now? And then I will probably take my profit somewhere around here, or I will take my profit based on the number of pips that I'm calculating. But most importantly, what am I looking for? I'm looking for price to pull back to the 14 moving average. That's the first thing I was looking for. Price to pull back to the 14 moving average, and then a confirmation on my second level indicator, which happened here. Okay, price pull back to the 14 moving average, price pulled back to the 14 moving average, confirmation here, price pull back to the 14 moving and 50 moving average here again, confirmation here, and then I take it up. I take this up as well. So I'll have two trades running from here all the way up. Okay, but I would not enter the trade on this time frame. Take note of that. I would do my confirmation here, but I will not enter the trade on this time frame. How? I would go and enter the trade on a smaller time frame. What do? At this point, let me even see where price is right now. Right now, price is at this point far away from the 18 moving average, from the 14 moving average. I expect price to go back to the 14 moving average sometimes soon. But opportunity, what kind of trade am I looking for here? A buy or a sell? That's correct. I'm looking for a sell. I'm looking for a sell here because we have 14 crossing over 800 already. Price has pulled over 800 and gone back to it, retested it at this point and failed again. So now we're expecting price to continue to sell down. Are we together now? So it's as simple as that. I'm looking for opportunities to sell. So what am I looking for? I'll be waiting for this price action to pull up to 14 moving average. Yes. You're asking me if it's going to happen. Yes, it's going to happen. There's going to be a pull up from this point to this point at least. Okay, so when that happens, when I see price as close to 14 as possible, then I will switch to a smaller time frame. If I was trading on 1 hour, I'll switch to 5 minutes. Okay, I will switch to 5 minutes. Then on 5 minutes, I would wait for a confirmation as usual here, which is, you see what has happened? I'll wait for price to go. By that time, price will be close to this guy here, close to 50 here. So I will just get in here at this price, and then I would put my stop loss above the 200. I put my stop loss above the 200 on the smaller time frame. Take note of that. That is how you enter a specific trade. So like I said, remember what I said, that price is going to pull up to this 14 moving average, and that is what you see happening on the smaller time frame here. Can you see? You see 3 candles going up already, breaking through 200. So it's going to keep going until it gets above, a little above 250 here, before it now starts falling down. So that is what this I'm waiting for to get into this trade right now. Okay, so this is how I trade. This is how I love to trade Forex. Now, Forex is a game of patience. If you are not patient, you would not be able to stay in the market. If you don't know how to divert your emotions from your trade, you're going to be running into troubles. Okay, now at the end of this video, because the video is getting too long already, in the next video I'm going to be treating different types of chart patterns, types of chart pattern that you can see to give you a direction as to what to trade or how to trade. Okay, and how to understand the chart patterns you're looking at as well, so you can understand the chart patterns you are looking at. So I want to thank you for watching this video, and hope to see you in the next video. Have a good time.